Hello and welcome to the Weekly Forex Outlook at xm.com. In the spotlight next week will be Friday's non-farm payrolls data and the ECB decision on Thursday. We'll also get Canada's employment report and the minutes of the latest RBA meeting, which Aussie traders will be closely watching. I'm Maria Pachurdes, and joining me is senior market analyst Haralambos Pissouros. So Haralambos, let's start in the U.S., where President Trump continues his tariff threats against the U.S.'s main trading partners, and DOGE continues to cut federal jobs. Next week, we'll get ISM manufacturing and non-manufacturing PMIs on Monday and Wednesday, and the all-important NFP print for February on Friday. What will all this data mean for the Fed's rate path and the dollar?
Hello, Maria. Yes, we do have important data coming out from the US next week, with the highlight being Friday's employment report. Following the weakness in last week's US data, investors have turned more dovish than the Fed itself for the first time since the December FOMC decision. And just to let you know, they are now penciling in around 60 basis points worth of reductions this year compared to 50 projected by the December dot plot. However, with US President Trump ramping up his tariff threats, it is hard to envision a clear roadmap, as the imposition of tariffs is a major upside risk to already sticky inflation. Now, with regards to the NFPs, the January report revealed lower than expected jobs growth, but this was due to temporary factors such as the wildfires in California and the cold weather across the country. Now, as Elon Musk's Department of Government Efficiency continues to cut federal jobs, February's NFP print may also come in on the soft side. However, the subcomponents of the report include government payrolls, and any weakness there would not come as a surprise. So, should the other sectors point to a re-acceleration in employment growth, it could be an indication that the private sector was strong enough to absorb the employees who lost their jobs, and thus the dollar could benefit. Investors may start betting on fewer rate cuts again for 2025, especially if the ISM PMIs earlier in the week do not corroborate the weakness in business activity revealed by the S&P Global prints.
Moving to the Eurozone now, preliminary CPI inflation numbers will be released on Monday, and the ECB will meet on Thursday. At its last meeting, the ECB cut interest rates by 25 basis points. What are we expecting to hear next week, and how might the euro be affected?
Yes, the ECB cut interest rates by 25 basis points, but gave no clear signals about the future pace of easing. This allowed investors to continue penciling in around 88 basis points worth of additional reductions by the end of the year. Now, another month of accelerating inflation and another guidance that points to a meeting-by-meeting approach could help the euro move higher, even if the ECB cuts rates by another 25 basis points. After all, this is already fully priced in. Having said that, though, any ECB-related gains are likely to remain limited as tariff uncertainty is still facing the European Union. Just this Wednesday, US President Trump said that he's planning to impose 25% duties on European cars and other goods, while delays in the efforts by German conservatives to form a coalition after their election victory could also weigh on the common currency. Attention could also fall on the special summit on Thursday, where European leaders will meet to discuss additional support for Ukraine and security guarantees.
And finally, we'll also get the Canadian jobs report on Friday, as well as RBA minutes on Tuesday, and GDP data for Q4 out of Australia on Wednesday. What should traders watch out for?
Now, in Canada, following the better-than-expected jobs report for January and the stickier-than-expected core CPI numbers for the same month, traders are assigning a strong 50% chance that the Bank of Canada will take the sidelines at the next meeting on March 12th. Now, another strong employment report could add more credence to the idea that Canadian policymakers could take the sidelines, but Trump's renewed tariff threats toward Canada are unlikely to allow loony traders to celebrate for long. In Australia, the RBA delivered a hawkish cut at its February decision, and thus the minutes may provide additional information on how willing officials are to take the sidelines again. Should this be the minutes message, and should the GDP data come in on the strong side, investors could become even more convinced about an April pause. The Aussie could gain, but the concerns surrounding China's economic activity and the prospect of additional tariffs by the US on the world's second largest economy and Australia's main trading partner may limit those gains in the Aussie.
Arlemus, thanks so much. This was the Weekly Forex Outlook here at XM.com.